Owning real estate inside an IRA sounds like the best of both worlds. Real estate income with tax-free or tax-deferred growth. The rules are strict. The penalties are severe, and the liquidity problems at RMD time catch a lot of investors off guard. Today, we're giving you the full picture.
Welcome to Leibel on Fire with Amazon best-selling author and Yields for You portfolio manager, Leibel Sternbach. Leibel on Fire is supported by our ETFs, Yields for You Strategy A and Relative Strength Managed Volatility. Our mission is to help 1 million people retire with financial security. Now, the Financial Independence and Retirement Show dedicated to helping you build the life of your dreams as fast as possible with as little stress as possible. It's Leibel on Fire.
I'm joined by Leibel Sternbach. I'm Freddie Bell. Glad you're with us today. And Leibel, I'm wondering, what does owning real estate inside of an IRA actually look like? And what are the key tax benefits people are hoping to get by doing this?
I actually get this question frequently, which is surprising. So you can own real estate inside of your retirement accounts. The process, it's a little bit, it's got a few steps, which is why most people don't do it. But there's a small cottage industry that's set up to help facilitate making this happen. But primarily what it means is that you need to open up a self-directed IRA account. So that means an IRA where you can invest in the entire world of investment options that are allowed under the tax code, not just things that you can purchase on the stock market. And the second thing is you need to then establish a company that is going to invest in the real estate, and you are going to invest your IRA in that company. Now, this company that's going to actually do the real estate needs to follow certain rules, because there is one big catch that the IRS has when it comes to how your retirement accounts can be invested. And that is, you are not allowed to directly benefit from the investments of your retirement accounts, because your retirement account is supposed to be about your retirement. It's not supposed to be about personally benefiting you. And if it personally benefits you in any kind of way, then they look at it as a premature distribution, and they look at it as a disqualified activity. And then they can come back and basically say, well, actually, your retirement account is not a retirement account because you're not acting like a retirement account. And everything from that day forward will be considered to be a distribution, and your entire retirement account gets, invalidated, and all the gains you have to pay taxes on. It just switches status from being a retirement account to being a regular brokerage account, which has huge tax implications. So obviously, we don't want that to happen. But from the standpoint of, can we invest in real estate? Yes, absolutely, we can invest in real estate. And the reason why people like to do it is because you work all your life and you accumulate all this wealth in your retirement accounts. And when, it comes up and you're like, well, I want to invest in real estate. I want to buy a house and flip it. I want to rent it, right? I want to have some passive income. Or maybe you want to kind of build your dream home with it. And people are looking at their assets and they're like, well, I just finished paying off my mortgage. I don't want to take out a new mortgage. And I don't want to get into more debt, but I got all this money out of a retirement account. I don't want to take a distribution because that's taxable income, right? And I can't afford to take $300,000-$400,000 out for taxable income. Like 40% goes to the IRS. So they're looking for ways that they can use that retirement savings without paying the tax man. And the IRS doesn't really like that, but if you follow the rules, you can absolutely do it.
Interesting. We're talking with Leibel Sternbach, and I'm wondering, can you tell us the role that unrelated business taxable income plays, what it is, and why does it catch so many investors off guard?
So like we said, right, there's rules as to what your retirement account can invest in. Mm-hmm. And if you invest in something that generates income that is not under the, kind of allowed rules, because the IRS really doesn't want you investing in active businesses. They want you investing in passive businesses. We've talked about this on the show a lot, right? That the that in the United States, our tax code is really the secret to the economic engine that is the United States. And it is our economic engine because it's very good about moving money from places where it exists to where it can benefit our economy and benefit our future. And when we look at retirement dollars, right? Retirement dollars are supposed to be, one, investing in the stock market, which is the future of the United States economy. And number two, it's supposed to be our retirement accounts to keep the federal government from having to bankroll everyone's lifestyle for 40 years once they retire. Because if you look at Europe, that's what's happening, right? You look at socialist countries, that's what happens. It's on the federal government to pay for everyone's housing and everyone's food and everyone's health care, because that is the social contract that exists in those countries, as well as the fact that if the people don't have money, right, nobody's okay with them just living on the streets and being poor and sick, right? That was why we were okay with Social Security, right? I mean, you look back at the Social Security, the country was very much divided on it, right? A lot of people saw it as being a communist, socialist construct, but the FDR was able to get that passed because there was enough people who were working and they got to the point where they weren't able to work anymore. And us as a country said, it's not right that these people who spent their entire lives working and in the last few years of their life, they hurt themselves, they can't support themselves, and they become a burden on their families who now have to stop working to be able to feed them and clothe them and house them and take care of them. Let's give them some financial support in their old age, right? And that's why Social Security is called, the Old Age, right? Social Security and Disability Act, right? Because that's what it's for. Having said all of this, when we talk about investments, right, and we want retirement dollars, we don't want people taking retirement dollars and starting businesses. At least we don't want to make it easy for them to do that, because that's not a very good bet. Right. It's not a very good bet on your financial future. Most businesses go bankrupt, even the ones that don't go bankrupt. Right. It takes a long time for them to become cash flow positive. And so if we encourage people to do it, well, you're just going to have a whole lot of scammers who are going to come out, a whole lot of people who have get rich quick schemes, and you're going to end up with the same situation. So the IRS and Congress have made it so that while you can do investments in your retirement accounts, because we are a free country, and so we're not going to completely restrict you, we are going to make it that if you generate income in a way that isn't really in line with how we want retirement accounts generating income, we are going to tax you on that income, and we are going to make your retirement accounts pay those taxes, which becomes really becomes a difficult proposition. And so when we look at holding real estate inside of a retirement account, well, you have losses that you generally generate on real estate. Those are not valuable to a retirement account, and they're not valuable to you as the owner of the retirement account. However, the income that you generate on that gets taxed in a way that is different than, just dividends that you would get from a stock. And so you got to be aware of that. You got to be aware of the type of investments you have, like owning hedge funds inside of a retirement account can generate similar type of problems.
So it's interesting. So if you can use a mortgage inside of an IRA, is it worth the complications? You've just explained a few of those already.
So one of the restrictions, right? One of the restrictions that you have on retirement accounts is they are not allowed to borrow to invest. And so you can't actually get a mortgage inside your retirement account. So that means that you're using all your money to fund this real estate venture, which is something that people don't really recognize. The other thing is you have a fiduciary responsibility to your retirement account. So if you go and get a commercial loan to be able to purchase this property, right, and you're using your retirement account, you can't pledge your retirement account as collateral, right? So it's very difficult to get any kind of bridge loan or commercial loan or real estate loan to fund your venture, which means you're using all your money to do it. And even if you did do it, you have a fiduciary responsibility to make sure that it follows all the rules, and you cannot use your other money to provide a loan to your retirement account. So it becomes very complicated. Now, having said that, There is sort of a way to do it with what's called a ROBS corporation. I think we've talked about it on another show. I personally have a ROBS corporation. That is the corporation that has funded our ETFs. And a ROBS corporation is a 401k, not an IRA. And it could do some of these things. However, it is not allowed to invest in real estate, or its primary investments shouldn't be real estate, because the IRS recognized that was a way to get around the rules. So.
Wow. We're talking about the real estate, but it's interesting. So what is the magic bullet? How can we accomplish the goals for which we're looking and still not run afoul of the IRS and lose all of our money in the process?
So number one is you got to use a company for your self-directed IRA that specializes in real estate and understands all the rules. Number two is you got to be very careful that what you're doing, that you're not doing any of the disallowed activities and you're not doing business with any of the disallowed persons. And you are a disallowed person when it comes to this. So one of the common ways that people get in trouble is they're like, oh, I'm going to do flips. I'm going to invest in real estate, and then I'm going to do the work of flipping the property. The IRS specifically says you are not allowed to do the work of flipping the property. You have to hire the people who are going to do the work of flipping the property. Now, that doesn't stop people from doing it, but it does mean that if the IRS catches them, and the IRS is not above sending people to the property to see what's happening and take pictures, right, that you will get in trouble. The other thing is you may not get in trouble directly with the IRS, but your insurance company, who very much has an incentive to figure out what's going on, may file something. And if they file something, the IRS will probably pick it up. So you gotta make sure that, dot your I's and cross your T's, but you absolutely can do it. And in these companies that do the self-directed IRAs, they generally have good guides that will walk you through how do you navigate those lines. But if investing in real estate is something that you want to do, it's something you have a passion for, it is something you have knowledge for, then doing it inside of an IRA is definitely a possibility. However, see our other episodes about concentrated positions. You still don't want to have too much of your money tied up in real estate. You also want to make sure that even if you do, that whatever plan that you have, right, is conducive to your financial security and isn't going to hurt it. Keep in mind that you will have to take required minimum distributions from these accounts. And while if all your money is tied up in a house, you still got to take your RMD, which begs the question, how are you generating the cash to give the IRS from that house, right? And so you need to really think about these questions before you invest. And I often have people who come to me who they start having to take these RMDs, and then they're struggling and they're like, well, maybe I'm going to do a Roth conversion. Well, you can't do a Roth conversion of partial, right? So you start really struggling, and you can't sell yourself the property because that's a disallowed party. And so you end up in a whole lot of issues. And so you got to think about these things ahead of time. It's not that they're not you can't navigate them. It's not that solutions don't exist, but you need a plan for it. Otherwise, they will bite you in the butt when you least expect it.
And nobody wants that. So what do you have at yieldsforyou.com that can help us to navigate through this whole process and to answer the questions that we have?
Yeah, so look at our podcast episodes. But again, something like this, reach out and have a conversation with us, right? Book some time on our calendar. More than happy to talk. Go through our free retirement tax SWOT process. When you get on that call with me, right, you go through, we'll talk about, I'll have, your finances pulled up. I'll have the projections. And then we can talk about, okay, what is it that you're planning to do? And does it really fit into your plan? How do you do it in a way that fits in? So that's what I would really recommend. And then look under resources. We got a list of the self-directed custodians that we worked with before that you can take a look at.
Really interesting. Real estate inside an IRA can work, as we've heard, but it demands discipline, capital reserves, and a thorough understanding of what's not allowed in transactions rules. For most retirees, the liquidity risk and administrative complexity are bigger obstacles than they expected going in. Know the full picture before you commit.
If you would like to see how the Yields for You team can help you get off the Wall Street roller coaster and save you money on taxes so you can live the life of your dreams, book an appointment online at yieldsforyou.com or call 410-914-4600. 4894.
Yields for You is a registered investment advisor in the state of New York and only transacts business in states where the firm is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussion should not be construed as an offer to buy or sell or solicitation of any offer to buy or sell the investments mentioned. Annuity guarantees are subject to the claims paying ability of the issuing insurance company. Content should not be viewed as legal or tax advice. Always consult an attorney or tax professional regarding your specific legal or tax situation.